So we start putting all this together, moving averages on OBV, relative strength index, MACD, and it starts to tell us a story. And we are going to follow that story to be able to profit regardless of whether a stock goes up, down, or sideways once you learn both stocks and options. Hey everybody, Steven Sidkowski here. I'm the Chief Investment Officer and co-founder of Market Mastery Group. Hope wherever you are well and safe. And this is a continuation of my series on technical analysis, how to read a chart, which really is as much an art as it is a science. There's a lot of interpretation involved. And so what we've been doing is looking at various indicators, and we want to be able to line all these indicators up and have them tell us the same story so we can be confident in taking either a bullish, bearish, or market neutral trade. And if you want to know more about how we take those kind of trades, I'll tell you where you can get some additional information. We are going to be discussing the power of support and resistance. Support and resistance. And I'm going to show you how to be able to create trend lines that identify where support and resistance happens to be. So first of all, I want you to think floor and ceiling. So let's pretend that we're sitting in this room where I'm recording from, and there's obviously a floor and there's a ceiling. I'm not out of doors. And if I took a bouncy ball and I threw it and it hit the floor, what would it do when it hit? It would bounce. And it would go up until it hit what? The ceiling. Let's assume there's no gravity. And then it would bounce down and it goes back and forth. And you will see patterns on stocks where a stock, every time it gets down around 20, it tends to go higher, and it hits around 30 and it tends to go lower. So these are psychological levels, right? We're not the only ones engaged in technical analysis. So think about this. Let's use the 20 and the 30. If you're a trader, you're an investor, and you see that a particular stock, whenever it gets around 20, tends to go back up. By the way, why is it going back up? It's going back up because at that price level, there are enough traders or investors who think it's a good buy and want to get in. And as they start buying, what happens to the price? It goes up. So that's a price where it's enticing enough to get people to purchase. And then the price goes up, up, up. And let's say that every time it gets around 30, the price comes back. So if you own the stock, it gets around 30, what are you going to do? You're going to sell it, which is going to make the price do what? Going to make the price come back down until what? It sinks maybe around 20 again, and then you jump back in. So these are very strong psychological levels that trigger both buying and selling. They are also reversal points. So you could have a stock that is moving down. Once it hits the floor, you see it bounce, and it's going up, and it has really nice momentum until it gets to that level of resistance, the ceiling, and then it tends to get capped at that point. I'm going to show you where you create support and resistance by showing you how to draw trend lines. So essentially what we're doing is, as I'll demonstrate, we're connecting what are called pivot points, areas where something goes from down to up or from up to down. Now, here's another thing that's really fascinating about support and resistance. It won't hold together forever. There's no stock in history that's traded between 20 and 30 forever. At some point, it'll either break above the 30 or below the 20. Now, here's the fascinating part. If a stock breaks above the 30, it'll go up until it finds a new ceiling. And what used to be the ceiling at 30 now becomes the floor. So old resistance becomes new support, and old support becomes new resistance. So let's say it breaks down below 20 and it falls to 15, and then it starts moving back up. Chances are it's going to find a lot of resistance when it hits 20 again. And also pay attention to round numbers. I know this sounds silly, but again, the psychology of the market. So when I try to find support and resistance levels, 10, 20, 30, 40, or 105, 110, 115, 120, Again, those become areas where people will typically step in and buy and or sell. Okay, let me show you how all of this works. This is the last 6 months on the S&P 500. Now, this tool that I use, and you'll learn more about it if you come to one of our webinars, allows me to annotate the chart. So I'm going to come over here. See that little deal? It says draw a trend line. Okay, let me click on it. So now I can illustrate for you. So basically what we're looking to do is to connect lows and highs. So there was a low. See that little pivot point right here? There's a pivot point right here. There's one right here. So all I'm going to do is just connect the dots. Then I'm going to do it on the highs. Okay? So that was a channel representing support and resistance. The bottom trend line down here, okay, that is support. Up here is resistance. And look, it went up, bounce, 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 bounce. Then notice it broke through. So we started a new trend. So let's do the same thing. Connect these lines. Okay. And then what did it do? It broke through again. All right. So one of the things that I teach in my classes, I call it trade the breaks. So we set up these trend lines, and if it breaks above or below, that represents an opportunity for us to take advantage of a new trend or a strengthening trend. In other words, let's create this trend line right here, okay? When it crossed below, that's a whole new trend. Do you have any idea how much money you could have made with put options during that period of time? The answer is more than you want to know, a small fortune. All right, let's do the same thing with another security. So this is Apple. So I'm going to draw my trend lines. So they look like that. And they look like that, right? What happened right here? Broke below the trend. Started a new trend. What happened here? Started a new trend. So what is the trend on Apple right now? Starting to move sideways, but it's still in this channel, so we would expect it to go higher. Again, one more indication of what direction the stock is likely to move. So we start putting all this together, moving averages on OBV, relative strength index, MACD, and it starts to tell us a story. And we are going to follow that story to be able to profit regardless of whether a stock goes up, down, or sideways once you learn both stocks and options. You're starting to see the power in this? Do you like the way that that looks? Awesome. So if you want to get more information, I do a couple of live webinars per week. You want to attend one? They're free. Click on the link, give us some basic information. We'll send you out an invite and a reminder, and I hope to see you there. Until then, God bless. Everybody stay safe. Bye for now.